Wouldn't it be great to be able to take your existing mortgage rate and remaining loan term with you when you buy your next home? That's the concept behind portable mortgages. And with more than 50% of the current mortgages here in the US with rates below 4%, it sounds like a great idea. Portable mortgages are available elsewhere in the world, but not here in the US. And that's because mortgages here operate differently. We have what's called Mortgage Backed Securities, or MBS, as we refer to it. So conventional financing falls under Fannie Mae and Freddie Mac. FHA, VA, and USDA type financing falls under Ginnie Mae. When mortgages close, they get sent off to the secondary market for Fannie, Freddie, and Ginnie Mae. They become mortgage-backed securities. Investors buy mortgage-backed securities in the form of mortgage bonds. This is what keeps the mortgage market liquid. Banks alone do not have enough money to lend out to satisfy the overall demand. Banks can only lend out based on what they have in deposit. And if they lend more, that's a real problem for the bank. And ultimately, a real problem for everyone. Without MBS, we likely would not have 30-year fixed rates. We likely would see increases in mortgage rates and increases in down payment requirements. And ultimately, we would see periods where mortgage money was frozen because there's not enough to lend out. So to finance the purchase of your home, which most of us do, you would need to wait until someone else pays off their mortgage. And the way MBS is structured, MBS is tied to specific collateral. It's not transferable. And there are standard amortization periods, and there's predictability as to when prepayment will likely occur. Those factors all play a role in the investor's decision-making process to purchase mortgage bonds. When investors want to purchase mortgage bonds, we typically see rates improve. When they do not want to purchase mortgage bonds, we typically see rates worsen. So portability would be a win for those borrowers with existing low rates of transfer, but not such a win for those borrowers who do not have an existing low rate to transfer. And ultimately, for portability to become reality here, so much would need to change. We're talking underwriting guidelines, servicing rules, loan disclosures, automated underwriting software. That's a huge undertaking. So if portability does become an option here, I think it's going to be a while until we see it. And I don't think we'll see it on the wide scale with Fannie, Freddie, and Ginnie Mae. I think we'll see it limited to portfolio type products. If you have any questions, connect with me via Linktree.